Finally today, Silicon Valley continues to hope that this will be the year that the startup logjam breaks. But this data from CB Insights shows why things are getting so desperate. According to them, a record 1,200 VC-backed unicorns have yet to IPO or get acquired. According to Carta, fewer than 30% of 2021 unicorns raised funding in the past 3 years. So there are hundreds, literally hundreds of unicorns out there that are in danger of running out of runway. Quoting Bloomberg, a reckoning that has been looming for years is becoming painfully tangible. In 2021, more than 354 companies received billion-dollar valuations, thus achieving unicorn status. Only 6 of them have since held IPOs, said Ilya Strebulaev, a professor at Stanford Graduate School of Business. 4 others have gone public through SPACs, and another 10 have been acquired, several for less than $1 billion. Others, such as the indoor farming company Bowery Farming and AI healthcare startup Forward Health, have gone under. Convoy, the freight business valued at $3.8 billion in 2022, collapsed the following year. The supply chain startup Flexport bought its assets for scraps. Welcome to the era of the zombie unicorn. There are a record 1,200 venture-backed unicorns that have yet to go public or get acquired, according to CB Insights, a researcher that tracks the venture capital industry. Startups that raised large sums of money are beginning to take desperate measures. Startups in later stages are in a particularly difficult position because they generally need more money to operate, and the investors who'd write checks at billion-dollar-plus valuations have gotten more selective. For some, accepting unfavorable fundraising terms or selling at a steep discount are the only ways to avoid collapsing completely, leaving behind nothing but a unicorpse. Many startups were built to chase growth with little concern for near-term profitability in their early years, assuming they could continue fundraising at increasing valuations. In many cases, that formula no longer works. Fewer than 30% of the unicorns from 2021 have raised financing in the past 3 years, according to data provided by Carta, a financial technology company working with startups. Of those, almost half have done so-called down rounds, where investors value their companies at lower levels than they'd received in the past. Celebrity video greeting service Cameo, for example, once had a valuation of $1 billion, but it raised money last year at a 90% discount, according to a person familiar with the matter who asked not to be named when discussing confidential information. Financial tech company Ramp has raised 2 sizable rounds since early 2022 at valuations below the $8 billion it got 3 years ago. Deep-pocketed investment companies, including private equity firms, may buy some of these slow-growing startups, but businesses are simply not going to fetch the type of valuations investors were giving them back in 2021, says Chelsea Stoner, a general partner at Battery Ventures, which invests in and acquires startups. The remaining optimists can hope that something will spark a new round of techno-enthusiasm, or that a Lena Khan-less Trump administration will goose the acquisition and IPO markets. But Greg Martin, founder and managing director at Archer Venture Capital, says that for many unicorns, the only, albeit unlikely, hope is for the market to go crazy again. Unless we have another irrational valuation environment created by zero interest rates like we had in the pandemic, he says many of these zombie unicorns are going to wind up in the graveyard, end quote.